Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as I go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what people are sharing. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities, sharing those opportunities with everyone. I am a contrarian. I do take risks with certain sectors and companies, and I really try to focus my efforts on finding very leveraged companies in each of these sectors to give you the asymmetry, the big upside potential with the small downside risk that I look for in everything. Then put together a portfolio. You guys can see my portfolio on the website and the companies that I overweight versus not weight as much. And you can see how I set up my portfolio for the commodities bull market that we are in and that I think will accelerate going forward in the future. We have a special coupon code. Special is the coupon code, 50% off the first month only, and a larger discount on the yearly membership. If you're in the monthly, you can always switch to the yearly membership for savings if you like to do that. So coming down, a little piece of advice: buy broken stocks, not broken businesses. Well, the stock, it's not about broken stocks. It's about the price fluctuating. So what you want to see is you want to see a disconnect between the value creation of the business and the price that the stock is trading for. So a good business increases its value over time, and then the stock price continues to go down, and that could be driven by sector fundamentals. It could be driven by sentiment. It could be driven by a fear event in the market, whatever it is. It doesn't matter what it is. What you want to look for is you want to see the value of the business continuing to grow while you get an opportunity for the disconnect between the price going down underneath the value of the stock. This is what you want to pay attention to. This is what you need to become an expert on. You want to be an expert when this diverges between the business value and the price of the stock. That is where I make all of my money. All of it. I buy undervalued crap that nobody wants, and then the market conditions change. Maybe fear exits the market. Perhaps maybe it is a sector that comes back into favorability, whatever it is, and then the price comes back up because money flows and sentiment comes back into the sector. So speaking of these types of ratios, I know somebody asked me during one of the events, am I still buying physical metals? Well, I always buy physical metals. I mean, I always hold physical metals. I don't know if I'm always buying, but I'm always holding. And buying the undervalued metal is what I do. Some people tell me I'm crazy. I don't really care. I make so much money doing this in terms of playing these ratios and swapping these metals over long periods of time. I don't care what anybody thinks. It doesn't matter what people think. What matters is that you make money and that it works. So let's describe why it works and kind of the setup. So back in 2000, silver was cheap against palladium. So palladium was expensive and silver was cheap. So in 2000, you could say for this particular ratio that this is cheap. We had another instance in 2020 where this ratio got cheap. Now, I went out and I tried to buy a bunch of silver in 2020 when it was bottoming. The premiums, they jacked those premiums up. I bought a little bit when it was falling down in February of 2020, March of 2020, like the end of February, beginning of March. I nabbed a monster box at that time for $8,600. I can still remember. $8,600 for 500 ounces of a monster box. And we're talking like top shelf stuff here. You know, Maple Leafs, American Eagles, that type of top shelf stuff. That's the type of discount you can get if you can block out the fear and focus on the value versus price. That's this here. That's how you can get enormous amounts of stock at very cheap prices for potentially the beginning of a change from a bear market to a bull market. Bear market of silver to a bull market of silver. I nailed this thing. Now, some people say, oh, don't be humble. Be humble. It's like, no, you just use the ratios. You don't have to be humble. You don't have to be anything. Just buy it when it's cheap, sell it when it's expensive. it's that simple. As palladium gets cheaper against silver, we're going to get to a level where palladium is going to be favorable again. And I can't tell you exact timing, but I know when it will be, time. And here is your double bottom. And then here is your double top. And then the cycle just goes back and forth. I mean, it's that simple, guys. What you can do is you can swap metals for metals. So if you buy a bunch of silver back here in the year 2001, 2001 is when silver was really cheap. You could have entered the market of silver in that time frame, like down here, let's say, at $4.40. Let's just say $4.50. All right, we'll $4.50. So you put, let's say you put $10,000, or I don't know what you guys want to use for a starting amount. Let's say you put $10,000 in it. Divide it by 450. You've got 2,222 ounces. So that's roughly what we got. We're going to take this off and put it over here. So you bought a bunch of silver in that circle there. You wrote it all the way down, and you were lucky enough to capture it right on this side. Let's say it's on this side here because it bounced back. You didn't get the full bottom in 09, but it came up. You bounced back, and you say, you know what? I think this is a double bottom. I'm going to buy a bunch. So you swap your silver, your 2,222 ounces, into palladium in 2011. So palladium, we don't even need, we can just use the ratio. That's right. So let's say we swap it here, and we got it at 19. So what that means is we take our 2,222, divide it by 19, and now we have 117 ounces. So we'll round up. We have 117 ounces of palladium. We rode it all the way up from 2011 in a recovery phase of real estate, all the way up to 2020 where we got that fear event. Everyone's crapping their pants. Oh my God. C19, blah, 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 blah. So we get up here, and let's say we could swap it. We probably couldn't swap it for 160, but let's say we get it in here at about 105. So we get in at 105 just because I think that's a reasonable area to get it in. So what that means is we multiply by 105. We now have 12,285 ounces of silver that we are riding today. And we bought our silver back in 2001. So it's been 24 years holding this. We went from 2,222 to 12,285 ounces of silver. This valuation today would be worth, you multiply it by the price of silver. What's the exact price of silver right now? It is 34, let's just say it's 34.50. So we multiply it by 34.50. And that is $423,832. And that was from 10 grand in a 24-year period. Tell me something that can beat that. Now, you can get even more aggressive because that was just using one ratio. That was the ratio of palladium versus silver. We didn't even use the other ones, even though palladium is a good one to use. So right now, silver's outperforming palladium, and I do think it has more to go down. We've got platinum versus gold, and this is just ridiculous, guys. This is a ridiculously low level for platinum. This is something to watch here. Platinum is one to watch. So platinum gold ratio is at 0.3. This is an anomaly in history. Some people ask, would I still buy it? I would load I would load my grandma's car up with this. Platinum is fantastic. Platinum versus palladium. The low point was down here. I did swap some metals. My palladium metals for platinum down in April of 2020. Was I lucky? Yes, I was. I've been watching this ratio. I said, if it ever gets back down here, I'll swap. And then it came back down. There's a lot of fear in the market. The premiums were super low to do the swap. I was like, I'm not going to get a better opportunity. I'm going to get in there, do the swap. So I swapped them, and now I'm riding it back up. And now we're at a one-to-one relationship. I swapped it at 0.34, I think. So I've tripled my holdings of, quote, palladium if I were to swap it back into palladium. And I'm not going to do that. I'm going to wait until we get up here. And that's going to be, guys, I bought this back in 2009. I bought it like over here. So I bought it somewhere in that circle there. My palladium, I wrote it all the way down. Did my swap right in April of 2020. And yes, it was somewhat lucky that I swapped it the exact, April. And it turned out like this. And then platinum versus silver. Platinum is cheap. In fact, platinum looks incredibly good in a falling wedge. Three-hump consolidation. I think platinum is a sleeper. So that's the best metal right now is platinum. Why? Because it's the cheapest against all the metals. And whenever we got that in palladium. So back in 2009, palladium was the metal to get. It was right here. That was and right here in 2011. But that was the time to get it, was 2009. And that's where I bought my second big chunk of it in 2009. And you can also do palladium divided by gold. That is your palladium gold ratio. And you can see that palladium is getting cheap again. Some people ask me, well, would you rather buy platinum over palladium? It's like, well, palladium is getting better, but platinum is still the one that I would purchase. But looking at these ratios, if you look back, palladium was the buy of a lifetime here in 2009 because what was it? It was cheap against silver and it was cheap against gold. And then if you go back and you look at the platinum, or I'll just swap the ratio, palladium divided by platinum, that ratio in that time frame was cheap in 2009 as well. So palladium was cheap against all of the metals. And then I rode this against all of those metals upward. Here's palladium versus silver, 2009. We had a bounce, and then up. I increased my ounces of all the other metals holding palladium, and right now platinum is in that same spot. Now, it's not totally cheap against palladium. It's starting to work its way on up against it, but there it is. So what would I do? I think platinum would be the obvious buy. Now, some people will say, oh, it's still in a downtrend. Phooey! Phooey! You buy when there's max, when your risk is the lowest. And when you look at the risk in platinum, this is your platinum versus USD chart. This is about to break in any second, guys. We're going to get a monster move here. And you buy it when you're underneath the cost curve. 1100 is kind of that cost curve where things are bad. One thing you could also look at is you multiply all of them together. So you multiply palladium, platinum, and rhodium together, and this is what the producers see. This is a huge bull market for the producers when you multiply this all together. And then when you look at the shorter term, the time to buy is when you're down in these areas here. So this is when you get these big pullbacks and they start to consolidate. And this is platinum times palladium times rhodium. So that's when you want to be looking, when you're underneath the cost curve. So it's not about buying a breakout. It's about buying it where the price has to go higher because the companies are pulling back on supply and you're underneath the cost curve. And buying the physical metal is the least risk way to do it, to play that price underneath the cost curve. And your cost curve is the trio of palladium, platinum, and rhodium. We are running deficits in platinum, pretty good deficits. I would say between 750,000 ounces to 1 million ounces a year, 2024 and 2025. And eventually the price will go up, the ratio will swap, and people are going to start substituting palladium for platinum at some point out in the future. And then the cycle will repeat over and over and over. Empty nesters own twice as many three-bedroom homes as young families with children. Well, here's the problem that I'm going to state. And I'm in a house. My house is 5 bedrooms. It is, I don't know, however many square feet. I do have a finished basement. And we have kids that live here. Now, if I get older, here's my problem with housing. There's large frictional costs to move from one place to another. It's commissions. If the frictional cost was removed, where I don't have to pay a realtor or anything like that, if all of those frictional costs were removed, then I would be more likely to sell my house. If kids move out and whatever. If those frictional costs remain and it's a pain in the butt, I would rather just live in the house with no one in it, just like all these baby boomers are doing. I would do the same thing. So I know a lot of people look at it like, oh, those baby boomers, why don't they sell their house to someone who needs it? Number one, stop acting like a total idiot. Number two, there's a frictional cost to moving. And if you like where you live, why eat that frictional cost? And if you're in a house that's, I don't know, $500,000, $1.5 million, and you're paying 3 to 6% to sell the damn house, why eat that frictional cost? Just stay there. And that's exactly what I would do. I wouldn't move. Oh, I've got an extra bedroom or two. Who cares? Use it as an office. Do whatever you need to do. So there's simply no financial incentive for the former group to let go of their homes. There isn't. Unless someone comes in there and gives you a fat offer. But it seems like a lot of the families, they're not going to go around and give you a fat offer for the house. Everyone that I hear, on everyone that I see on Twitter, they just complain. They're a bunch of complainers. Stop complaining and start working. Go make some money. Go figure out how the stock market works. Go invest. Do things. Create some value. With $2 million, you're absolutely set for life. You can easily invest it 100% passively into a blend of balanced dividend growth stocks and treasury corps to generate 50 to 100K salary with plenty of principal and long-term capital gains to dig into, and if and when you want. With your day-to-day core life costs entirely covered, you can literally do whatever you want forever, practically anywhere in the world. Yeah, I think 2 million is a pretty good amount. I've crossed into what I would consider to be a sustainable dividend income where it supports my life. So I'm in that set for life. I hope I'm set for life in that camp. What I've done is I've invested in a lot of these commodity stocks that I think will have a huge runway of appreciation ahead of us, both in dividend income growth and in price appreciation. And I'm setting my life up now, and I'm putting not all, but I have a lot of money in these dividend payers. A lot of the companies that I originally invested in were not originally dividend payers. I bought them when they were kind of under stress. When the oil price went really low, I bought these things for really cheap. And there are other instances today that are also very similar to today in other sectors that I'm buying. And in the future, I think they're going to pay very big dividends. So I think my income is going to go up a whole bunch, and my net worth will go up a lot too. And that's based off of where you're buying in the cycle. The problem that most people will have is there's some really strong, I'll say, recency bias that people have. They think that they're linear thinkers. Linear thinkers think that whatever's outperformed recently will continue to outperform in the future. And that has been true as long as the cycle stays behind you. What I'm doing is I'm not a linear thinker. I'm more of a lateral thinker. I'm more of a one looking for a turn, and I buy the stuff that is turning, transitioning, that's down. So if something's down for 5 or 10 years, I'll say, well, what's going to cause it to go back up? Generally, it's a cycle. It cycles down and cycles up. So I buy things that are down, and then I ride the cycle. And if they used to pay a dividend back in the day, they generally will pay a dividend out in the future, a lot of them. And sometimes the dividends are larger than the original purchase price that I put into that investment um, over the bull market. Triangle Investor says a lot of noise about utilities contracting, uranium and lack of it last year. It's very simple. You don't need to be a rocket scientist to know they will contract big this year and in 2026. With every day, months, their inventory is going down. Is there another option for them? I don't look at the uranium market like that. A lot of people talk about the fundamentals of the uranium market. I'm a little bit different. I think money is going to flow into uranium because the other options look bad. So it's not about uranium outperforming. It's not about the sector fundamentals. It's about other people who have money that are losing money and are forced to put it somewhere else. So it's the options that are available in the market. So when you look at the options in the market, the bond market, if it's underperforming and it's going down, people are like, I don't want to buy bonds. If the stock market rolls over, technology stocks, S&P 500, Dow Jones, like those types of indices, if they roll over and start to go down, people are going to say, well, I don't want to be in these. They're going down. It forces people to move money. And during these big cycle changes, if you can get a bear market in stocks and bonds with interest rates going up, that's generally when they go into bear markets, and they're very overvalued, you can get a large rotation of money out of those asset classes into something else. They're going to start looking for alternative investments. This is the alternative investment. So it doesn't matter about the sector fundamentals. That's not what's going to drive uranium higher. It's going to be the lack of investments and the forcefulness of the market, forcing people in other investment classes that are starting to lose money. They're going to force them to get out of those sectors and into commodities and other sectors. That's what's going to cause and drive the uranium bull market, in my opinion. It says, will removing income tax for those below 150K a year really work? No, it won't. Those who pay, if you make less than $150,000 a year, let's say it's a family, they barely pay any tax. I mean, they barely pay anything. So if you remove the income tax, you basically didn't do anything to it for them. They already don't pay it. And if they do pay it, they pay so little, it just doesn't matter. So if you make 100, 120, 150, 100, 130, and you've got a family of, say, four, 2 kids, a wife, and a husband or something, they barely pay any tax anyway for income taxes. It is very, very low. So although 100, 120, 130, I used to be in that ballpark camp. I barely pay any tax. I barely pay anything. I've got 3 kids, me and my wife, so that's 5, and I barely pay any tax at all. And I was in this rough, income area when I was working a 9 to 5. So I would assume that most people like me probably don't pay very much in taxes. Unless you're single and making 150, you might pay a little bit more, but you don't pay that much. Casper says, here's a platinum, 321, boom. Yeah, it's ready to go. And we saw it earlier with the ratios. The ratios are all favorable for platinum. There's been a couple of other times in history. Rhodium in 2016 was cheap against all the other metals. 2009, it was palladium. 2000, it was silver. Roughly, gold was also real cheap in 99, 2000. And that's when you want to buy them. You want to buy them when they're cheap against all the other metals. And I'm loaded to the gills. I'm ready for this to go. Let's rip it. Let's do this thing. Think like a real estate appraiser. He says, I just don't see how we get a 30-40% decline in home prices. That's never happened besides the great financial crisis, and it's not the same today. Real estate is boring. 30 to 40% is tech stocks, Bitcoin volatility. It says Heard, a billionaire suggests that taking home prices down by 30, 40% would be a good thing for the middle class, which is an insane comment. And then Smart Real Estate Bets, I like this guy. He says the smart money is on your side of the bet, and they've got a lot of skin in this game. They're betting long on housing, as is I. All this talk of what home prices will do from people outside of real estate, I don't care how rich or smart they are, who have never spent 30 seconds digging into how housing has behaved historically. It's obnoxious and arrogant, and I hope they put their money where their mouth is and learn a much needed lesson in humility. The data all points to higher real estate prices. It's based off of the demographics. Everyone who argues against it, I think, fails to understand what the data is suggesting and says. They don't understand it. It'd be like trying to teach calculus to an elementary school, kids. Like that's their understanding of data, and you're just like, I don't know how else to lay this out. You need to have at least some level of understanding of how to read data, and I don't think any of these people online know how to present data, aggregate it up, and make solid conclusions from it. So that's where I think the problem is on Twitter, on YouTube. I also think that there's financial incentives to do what they are doing to mislead the public for views. I also think that's a huge driver of it. Reventure Consulting is one of the people that I am specifically signaling out that I see who does that. Mike Zaccardi says, inflation expectations are rising at an unprecedented speed, yet break-even inflation rates have ebbed. Interesting backdrop. Look at this inflation expectations. It's like ramping vertical here on the right-hand side. If that occurs, oil's going to just moon. Oil's going to moon. And here's another thing. This is coming no matter what. They're probably going to go to war and blame it on war. Watch. Quote me. We're going to go to war and they're going to blame it on war of this big, huge inflationary surge that's coming. Mexican billionaire Carlos Slim making huge bets on oil. He must not be on Twitter. Yeah, the big boys are stepping into oil big time here. It's coming. Would 800,000 be enough for you to retire? It could be. It depends on the situation of the person. If you own your home, 800,000 on top of that, you could probably retire. Yeah. If you don't own anything and you're renting, then no, I don't think it's enough. But if you own your home, you've got low monthly expenses. It depends if you have kids and how old you are. It's all dependent. If it was just me and I owned everything already, 800,000 would be enough. Yes. I love Munger, and Munger's quote is, "The world is full of foolish gamblers, and they will not do as well as a patient investor." Everything comes back to patience. Everything. And then the patient investor, you know what they do? They take advantage of short-term foolish gamblers. Ones who say they panic sell and then they FOMO buy. So what they do, the guys who are patient investors, they sit, they wait, fear enters the market, people sell just because the price is going down, has nothing to do with the value of the company or the sector. They step in and they buy the shares from people who are panic selling. And then the cycle just repeats over and over. And that's where Charlie gets all these quotes from. His quotes like, their decisiveness to purchase at the right time. They don't flinch. So they wait for the fear to come into the market. They see that the fear is in the market. They don't flinch, and they just start buying shares massively from all these panic sellers. And that's all they do over and over and over. They know the value of the company. They don't worry about the price movements if they know the value. And if the price is way below the value, then just buy the crap out of it. That's all they do. It's that simple, guys. Little middle coup. Silver is still the most shorted metal in the world. So we got silver and then platinum's right behind it. These two are going to be the biggest short squeeze ever. Then you've got gold and then you've got palladium. they're all going to get short squeezed over here. And that's all I've got for today. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. We got that special coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.